So let me do that. And let me get us on Facebook. Bear with me, everyone. Okay, so I think we are all connected to all the resources so people can get this information. So as you know, we are a housing counseling agency dedicated to getting people into home ownership. And I am so excited. I have called her a veteran and really a honorary RNHS staffer because she is our go-to in getting many of you into your homes. Ms. Susannah Harte, who has a number of years in the mortgage industry, and really do consider her our subject matter expert when it comes to figuring out how to get people into home ownership, especially when it's specific to down payment and different programs. There are other series that Susannah has supported us on, so please check out our YouTube channel. There's one on down payment assistance, but tonight I came up with the title or interest of why do lenders ask what they ask? Because as you go through this process, it can be a very intimate process. You want to know why they need it. So we asked Susannah, the subject matter expert, to have that conversation with us. So I'm going to hand it over to Susannah. Welcome again. Thank you so much for joining us. So Susannah, take it away.
Fantastic. Thank you so much, Nikki. This is a wonderful presentation, and I was really happy to be asked to do this. I get these questions a lot. When I'm going through documentation and going through a loan process with someone, I do get a little bit of pushback, and I fully understand that. Folks feel like I'm asking some very personal questions, but there are some reasons why we ask what we do. So the title of today's presentation is Why All the Questions Are Lenders Just Being Nosy. So let's see if I can get to the next slide here. Oh, it's not letting me do it. Hold on here. There we go. Let me see. Come on. It is not letting me. Oh, there we go. Okay. So technical issues of taken care of. So first thing we're going to talk about is what is behind all the questions that we ask. There are some regulatory reasons why we need to get where we're going when we're looking at putting together a loan for you. There's some general questions that you may be asked, very, the name, rank, social security kind of thing. And then questions regarding employment and income. Also, we're going to go over debts, savings, assets, and down payment, your loan purpose and property type and why this matters. And then I also have a resource page as well. You can go to this page and look up and take a peek at all of the things that I'm going to be talking about here today. So that is our agenda for today. Let's see. So why do we ask all these questions and what's behind it? Well, in January of 2014, the Consumer Financial Protection Bureau, or the CFPB, introduced a term to the lending industry known as a qualified mortgage, or a QM loan, a loan category that protects lenders from being forced to buy back loans if the loan is defaulted by the borrower. To qualify, the lenders must follow the CFPB's guidelines when determining a buyer's eligibility for a mortgage. The law dictates the lenders must also be able to prove they followed the CFPB's ability to repay guidelines when verifying the borrower's ability to repay the loan. We want to make sure that we're going to get our money back, is the bottom line. The more proof the lender has for the borrower's reliability and good financial standing, the more protection that they have, the loan has, and more that they will be lent on. Some of examples are mortgages cannot have loan terms that exceed 30 years. There used to be 40 and 50-year loans out there, but that is gone bye-bye. Mortgages cannot involve negative amortization or a condition in which the amount owed increases because the borrower is only paying towards the loan's principal and not its interest. These were also known as PICA payments. I don't know if any of you out there heard about those in the past, but they were really big just before the meltdown happened in 2009. Mortgages cannot include balloon payments or larger payments only going towards the loan interest that are paid towards the end of the loan term. So the first loan that I ever got into when I purchased a home was one I could afford, and that was a 30 due in 5. It was amortized over 30 years. However, after 5 years, I had to pay the whole thing back. So my husband and I did have to come up with a financial plan to refinance before that 5-year period. That's what a balloon is. Mortgages have specified limits on the borrower's debt to income ratio and the amount of upfront points and fees a lender can charge to a buyer. So a lot of complaints during the meltdown there were a lot of hidden fees. Well, now they've got it so that there's a group of fees that cannot change whatsoever once they're starting to be quoted. And as you get to your closing disclosure, they are buttoned in, they cannot move. There are other fees that have a tolerance level of 10%, and a third category, such as interest and taxes and insurance, part of the escrow account that can move. And there's not a limit on that because we can't regulate the time of the year when you close if you move into another month, and we need a little bit more for that impound account, for example. So some of the general questions that you're going to be asked. Well, first and foremost, your marital status. Are you married? Are you separated? Unmarried? And if you are divorced or separated, we do need to have the terms of these things. So are you paying child support, alimony? Are you receiving child support or alimony? Did you receive a lump sum distribution from that divorce decree? And where did that go if it was fairly recent? Or is part of the separation to buy out the other couple, and part of the reason that you're going through the loan is to refinance and buy out the other person? Are you involved in a legal suit? That's one of the general questions you're asked. Are you the plaintiff or the defendant if you are? And if you're the plaintiff, typically, are you going to be awarded funds? If you are, we like to see where it came from. If you're the defendant, it's really sticky because we want to see that you're going to have sufficient funds to cover in the event you lose your legal suit as the defendant. Have you sold a home through a short sale? That's another question. Lenders require a specific time from a short sale to lend again, and it depends on each type of loan. If you're going to do FHA, VA, or conventional, they all have a specific time frame from the short sale, or what we call seasoning from the short sale. So for example, I have here my little cheat sheet here that I pulled up today. For conventional, a short sale is 4 years in general. FHA is 2 and VA is 2. So that can give you some idea that you need to have a certain time frame following a major financial event. Have you foreclosed on a home? Lenders, again, we require a time frame from the foreclosure before we'll lend again. And it does depend on the type of loan that we're going to look at for you, FHA, VA, or conventional. So for foreclosure, that would be 7 years on a conventional, 3 years on FHA, and 2 years on a VA. Are you delinquent on any federal debt, such as student loans, IRS tax liens, franchise tax liens, any other sorts of federal debt? Because if you are, and we close the loan and you default, that federal debt gets paid before the lender. And you can kind of figure that the lender doesn't really like that very much. They want their money first, not last. So that's one of those sticky points. We really have to make sure that we understand that if you have any delinquent debt to the feds, that get cleaned up first before we move forward on your loan. Then there's also the government monitoring questions. It is an option to answer these questions. However, it really monitors the lender. Are we lending properly? Are we making sure that we're following fair lending guidelines? So that's for your race, your national origin, your ethnicity, and your sex. These are part of that HMDA data, and there is a link in the resource guide for these questions. So now we'll get in a little more specifics. So there's employment and income. For employment, where do you work? We do need to know where you're working, or if you're working and retired, or not working and retired. How long have you been on the job? Are you self-employed? Or are you retired? What works in your favor is the stability of your employment and income. How long you've been with the same employer or in the same industry for over 2 years. And if you work 2 jobs or more jobs, we like to see at least 2-year history of this with no gaps. In other words, you can't suddenly start driving for DoorDash, have that little extra money in the bank and figure that income will go towards it without a history. We need that history. We need to see that if you're crazy enough to work more than one job, that if you've done it for 2 years, you're going to stick it out and continue it for more time after that. We're also going to look at how you get paid, hourly versus salary. Do you have bonus and overtime? Is it retirement income? And is that retirement income taxed or non-taxed? Because the documentation for each type of these income will be slightly different. Now, if you're self-employed, that's the biggest one. This is the slightly higher risk category of the income. We do like to see absolutely a history of this. This is for contractors who are 1099. These are for Uber drivers. These are for DoorDash drivers. These are for Lyft drivers. Anybody doing any of the app-based income where you have your services rendered in order to do something for another person, you typically get a 1099. That is self-employed. You're going to file a Schedule C. So we like to see 2 years. We're going to take the net of that number. Now, we can add back stuff like depreciation, but again, in order for you to do your job, those expenses you're writing off are true expenses. So what you get is the profit that is considered your income. So how you're paid will determine how a lender calculates your income and what documentation that we are going to require. So definitely, you may have a lot of questions with regards to the number of pay stubs, the number of W-2s, if you need a profit and loss and 2 years taxes, awards letters, this, that, and the other. The big one, this is debt. As always, the biggest questions everybody always talks about. The different types of debts that are out there are going to play a part in your loan. We want to make sure that you are making your payments on time. So we're going to look at your credit report. We're going to look at recurring or credit cards, auto loans, alimonies and child support. That would be if you have a divorce situation and you owe for that. Tax liens such as the IRS and Franchise Tax Board, these typically, the alimony, child support, and tax liens don't show up on a credit report, but that's why we will ask for that other documentation. Student loans, these do factor into your debt to income, even though the CARES Act put them on furlough through the shutdown. And I believe it's May this year, they're going to start payments up again. We still have to factor in a payment because it is going to be a payment in your future. And one of the areas that after the meltdown that they saw folks say they had issues was as soon as the student loans became due and payable and were asked to be paid back on a monthly basis, that it became a hardship. We need to know that you are going to be able to make all of your obligations along with the mortgage. What sorts of things do cause complications? Well, is the credit balance on your minimum over your minimum limit? Do you have late payments? Do you have collections? Do you have charge-offs? These all play a part in how the credit score is calculated. It also plays a huge part in how we look at how you manage money. Yes, we do understand that there are things that have caused issues with folks' income, such that they have not been able to make payments in the past, but we want to see that a little bit in the past. At least 12 months, good, clear, no late payments, no new collections or charge-offs. Now, the other thing that can cause a complication are bankruptcies, as we talked about just a little bit earlier, a Chapter 7 versus a Chapter 13. So a 7 is a full bankruptcy. You lumped all of your debts in and said, I can't pay. There we go. Chapter 13 is a payment plan, and they each have their own criteria when it comes to what can happen when we're doing the loan. But we do want to know what caused the bankruptcy. We want to find out, was it you got overwhelmed, you had medical problems, and there was heavy medical debt? Was there a student loan that just suddenly came on and you had this $100,000 student loan, although you can't put student loans in the bankruptcy? Did it cause you to be delinquent on the rest of your debt? What happened? Tell the story to your loan agent, because it's really important. It's the loan agent's job then to take your story to the underwriter. So these sorts of things do play a huge part in what we're looking at and why we're asking all these questions. The type of new loan, FHA, VA, or conventional, depend on how long you go for before you can get that kind of loan again. Remember, I said there was a 4-year for conventional, 2 years for FHA. That extenuating circumstance, and I have done a loan in the past where someone had a cancer diagnosis. They had to declare bankruptcy due to medical, and we were able to do their loan within 1 year of that bankruptcy discharge because it was a circumstance well beyond their control. So there's maybe some things that are hard to talk about, and I get it, especially when it feels like with the bankruptcy situations. But telling your story and understanding what occurred helps the lender understand what sorts of programs we're going to look out for you and where we're going to put you on that path to lending. So the next area is another one that is pretty big. Savings, assets, and down payment. Or in other words, show me the money. I got to see where it comes from. So there's always just your checking, savings accounts. How much do you have in the bank? We need to see your bank statements. 2 months is the typical amount of bank statements that we like to see. Do you have retirement funds such as 401k? Do you have stocks, bonds, mutual funds? Or will you be receiving a gift fund from relatives? So we do, each and every one of those will have different criteria of what we need in terms of documentation. So typically documentation's 2 months of complete statements from all accounts, gift letter from the donor's ability to gift the funds, and we also need to see typically the transfer of the funds from the donor. What sort of things can complicate the assets? Well, large deposits. We look at anything that is beyond 50% of your bring home pay as a large deposit. So if you had a settlement for a car accident, or you sold a car and you put the money in the bank, we just need to know, and we need to see the documentation behind it. One of the other things I'm going to ask, only because this happened to me many years ago, moving money around, please don't do it. Leave your money where it is until it's time to move it to the escrow company. If you have to do it in a couple of steps, let your loan agent know. We have to be able to track it. We have to see it going from point A to point B. And there's no gaps that can happen in the middle. The last complication, overdrafts. Please, please, please. One or two, okay, it happens. We want to know what happened. But I have seen bank statements where somebody's paid quite a bit of fees for 6, 7, 8 overdrafts. Please just try and avoid that if you can. Now, what's the difference between down payment and cash to close? So down payment is the difference between the sales price and the loan amount. This is how much you're putting down, 3, 5, 10%, etc. FHA is typically minimum is 3.5%, conventional 3%, high balance 5%. And then depending on the type of property you're purchasing your transaction, you may need more. What accounts are you going to use for these down payment? Again, going back to show me the money. I need to see where it's coming from. And then there's cash to close. Cash to close is the amount of money that is needed to close the loan. This is your down payment plus your closing costs. That's all of the fees involved, and most loan agents will send out at least an estimate to begin when you're pre-qualifying so that you can be prepared. I need X number of dollars. Where do I come up with it? So next reason that we ask some questions are the purpose of the loan. Why are you borrowing money? Why did you go to a lender? What is it you're trying to do? You're purchasing a home. You're going to purchase the home to live in? Are you going to purchase an investment home? Or are you going to purchase a second home, a vacation home? These all have different criteria of down payment. They have some criteria of credit score, and they also have criteria of whether or not you can receive gift to do these. So that's one of the reasons why you may have a lender asking you, again, show me the money. Where is the money coming from? Credit report. One of them may not need as high a credit score, and another one may need significantly higher credit scores. Are you refinancing? In other words, are you a current homeowner right now? If you're a current homeowner, you can refinance. In other words, you're going to redo the financing on your home. There are several reasons you can do this. So for rate and term, what does that mean? That means that you're going to lower the interest rate. Right now, probably not something you'd be doing, but the other reason you might do it would be to shorten your term right now. So say you're in a 30-year fixed and you want to look at paying it off in 15 years and it makes sense, do that. You can shorten the term, make it shorter. Or you can pull cash out to pay off debts, home improvement, just to have money on the side if you're thinking you may need to have money for a child who's about ready to go off to college. These are very valid reasons for pulling money out of your home to pay for something. And lastly, there's the renovation loan. This is another type of way of both either purchasing or refinancing. In the refinance of the renovation loan, there is a way to increase the value and update your home by adding what's known as an ADU, or an accessory dwelling unit. That would be a granny unit. So you've often heard about adding the garage with the apartment above. That's the ADU. So those are some of the reasons why we might be asking you various questions. Now, lastly here, we've got property type. This really will play a part in why we're asking some questions. What are you looking to do? If it's a purchase, are you looking for a home that's on land, so you own the home and the land? Is it a townhome where you're sandwiched between two people and you pay an HOA? You will own the walls and you will own the land, but an HOA does play a part into that lovely thing called the debt to income. That debt to income, remember, is the ability to repay. There's also the condominium. The condominium, you own the space between the walls, but you don't own the walls themselves. So you may have a higher HOA fee for a condominium. And lastly, there's the multi-unit or 2 to 4 units, where you may move into one unit or own one of the units and rent out the other unit. This has slightly higher FICO scores. It may have slightly higher down payment requirements if you do conventional. If you go FHA, it's 3.5%, believe it or not, still on that one. And we can use rents to help you qualify for the loan. And each one of those types of properties will also be priced according to the risk involved. So keep that in mind. If you get quoted one rate for a single family home, it may not necessarily be the same rate on a condominium. So just keep that in mind. That's another reason why we might look at what types of property you're looking to purchase and or refinance. And here are some of the lovely resources. As you can see, there's quite a bit. The consumerfinance.gov, that's where we got the section on the CFPB. The Uniform Residential Loan Application, the one that I sent is the one that actually is the easiest to read. The current one, if I sent out a blank one, I think you might faint and fall over. The newer one is easier to read, and it really does have all the same information as the new one. It's just the way they formatted it. The Home Mortgage Disclosure Act of 1975, that's the HMDA data. That's for race, ethnic origin, ethnic and sex. And then there's Freddie Mac for one of the conventional. These resources are available. You can go right into them yourselves. You can look at the sections 101, 02, 03. And then Fannie Mae also does the guidelines for FHA and VA. They have their website, and you can see from the subpart B2 all the way to B6 has all the various different ways of the underwriting. And these are public resources. These are things that you can go and look at, read through, and if you find something that a lender's not telling you about, always ask. That's always a very, very important thing to do. At any rate, I think that takes us here at this point to questions. And I know it's kind of been a bit of a whirlwind here of about, 40 minutes. Do we have a lot of questions?
So Susannah, nothing in the chat, but we can open up the mic. So if you do have a question, go ahead and raise your hand and we can open up the mic. And while we do that, you mentioned condos. So I know this is just talking about why lenders ask what they ask, but since you're here and talking about types of properties, can you speak to, if someone is looking toward a condo, how lenders may look at vacancy, owner occupied versus rental, how that may play a part for those that may be looking for townhouse condos?
Well, for the most part right now, the vacancy factors and the owner occupancy factors are much more prevalent and important on an FHA loan, and the HOA has to be approved by HUD. To do a spot approval is not an easy thing. It's not a quick thing either. They typically take 30 days to approve a spot loan, and you can't even order the appraisal until after that spot loan's done. As far as a regular conforming loan, I haven't really come across too many issues with regards to owner occupancy. I think they opened that up and made that requirement completely depressed at this point, partly just due to the market and just trying to keep things moving along, particularly with the condominiums. I really haven't found that being an issue.
And again, if you have questions, please raise your hand while you're thinking. I'm going to get into your minds and maybe ask a question that maybe you hadn't thought about. And I see Stephanie. Good to see you, Stephanie. I'm going to go ahead and have you ask your question, and then I have a question, and then we have B. Gordon. So be Stephanie and then B. Gordon. Go ahead, and
Thank
Stephanie,
you.
and unmute yourself.
Hello, everyone, and thank you so much for this presentation. It is timely, and we need it for our clients. I have a question about, I have several questions, but I'm going to just go with this one first. What can you tell people about redacting information on their loan documents?
Oh, that's a lovely one. Okay, so when we get the loan documents, it is personal information, and I understand that. We have a lot of process to get your information sent to us securely. So do talk to your lender about making sure that they've got those processes in place for you. But we cannot have anything redacted. It must be full original. If there's something that's redacted, it just brings in more questions than answers. If it's something that you're very, very personal about it, or if it's another person's name, or if it's the account numbers on the documentation itself or social security numbers, again, I understand that that may be a security issue, but we must have clear, clean, no redactions whatsoever documents. Unfortunately, I know that that's not to everybody's liking, but that is definitely the case. And as far as I know, looking at redacted documents for showing proof of funds for your offer, that's a whole different story. That's something to talk to the realtors about.
And Susannah, for those that may not be completely familiar with the term about redacted, what does that mean and how does that show up? And after Susannah, then it'll be B. Gordon.
Okay. Redacting is when somebody took a black marker and marked over a piece of item in a document, such as an account number, a social security number, date of birth, or they just didn't like their picture on their driver's license. Believe me, I've seen that too. It's got to be clear. Yeah. No blackouts. Yeah.
B. Gordon?
Good question.
Hi, thank you for the presentation. So I know we're talking about what the lender, the kind of questions they'll be asking us when we're starting our loan process, but is this also true for just to get the pre-approval so you can start going out looking at houses? They'll be asking us the same type of questions and we'll be submitting similar documents for their pre-approval?
Excellent question. Yes, when you are applying for a pre-approval, the pre-approval letter itself says that the lender has looked at your credit, your income, your assets, and we've run DU, and we have got all the right answers. So we do have to look at everything. Sometimes if there's, I know that my form says 2 months bank statements. When you're just starting out, if you give me 1 month, I know that by the time we're moving forward, you'll have another month. But again, it's a communication piece between yourself and your lender to make sure that the information you're giving them is verified, and we're putting our name and our license number on that letter. So it's very important to us that when we're looking at your loan for a pre-approval, so you can go out looking, that we're looking at all of the documents and running that DU and making sure that everything is sound.
Thank you.
You're very welcome.
And Lakita, go ahead and ask your question.
Hi, how long after a bankruptcy is a good time to apply for a home loan?
Well, it would depend again on the type of bankruptcy.
Chapter 7.
Chapter 7. So if it was a Chapter 7 due to an extenuating circumstance and you've reestablished credit, your credit score is looking good, you may want to start talking to a lender now, at least to get an idea of, well, do we really need to wait a little bit longer? Or can we put together that extenuating circumstance? I will tell you, it's not an easy one to do for extenuating circumstance. I have done them. But again, if it's FHA, 2 years, conventional, you're looking at 4 years. And that's from discharge, not filing. Okay.
Okay, it's been 7 years.
Oh, you're beautiful then.
Okay, thank you.
Yeah.
Aisha? Aisha, we're having a problem hearing you. I'm not sure if it's your device or your microphone, but you're breaking up.
Okay.
Try it again. You
Hold
sound a
on
little
a
clearer
minute.
now. Try it again.
Can you hear me now?
We can hear you just
Yes.
fine now. Yes, perfect.
Okay. Now, my thing is how much credit will approve you to get a lender to even deal with you on a home lender's, on a home loan. You know what I mean? Because credit is so hard to, I've heard numbers and stories. My daughter just recently bought a house. I haven't really talked to her about what your credit score needs to be, but is that a factor that's
It really depends. There are some loan programs that will go down very low in the credit score. But again, keep in mind when we're looking at the credit and what your score represents is your ability to repay the debts that are on that credit report. If you have not looked at your credit report yet or recently, strongly recommend that you get in touch with Richmond Neighborhood Housing Services and start talking with the housing counselor. They can run a credit report that does not hit your score, and they run it with the filtration that is proper for a lender. Get an idea of what it looks like in terms of the amount of credit. You don't really have to have a whole lot of credit. Just a credit card, if you've got boost your credit score, that new Experian thing, I see that a lot, where you put your utilities on there, a cell phone, PG&E, your rent. That helps boost your score up a little bit. That makes a big difference. So talk with your housing counselor with regards to what it looks like. Don't put a number on a wall and say that's what I've got to go to, because that may not necessarily be the case. Okay.
Thanks, Susanna. And you're also bringing up the fact about alternative credit. Because we always say just because it's a low credit score doesn't mean that it's bad. It just means how did you get to the score? So do agree
Right.
with Susanna. Talk to someone so we can evaluate your situation. Diane, you have a question?
Yes. My question is, so Richmond Housing Services, so just so that I'm clear, you help people to get home loans, is that correct?
Diane, our organization is a HUD counseling agency. So what that means is that we provide the counseling services and the education courses that most lenders who are providing these down payment assistance programs and community lending programs require. As a housing counseling agency, we do things a little differently than most, that we created something called the Lender Ready program, which we take a high touch approach, basically taking you through the underwriting process, and through our partners help you identify the best lender based on your needs, based on your criteria, and help you select the best lender for you based on our network. So we're not a lender, but because of our relationships and how we do things, we kind of guide you through that process. Without that support, that would mean you would go to bank A, you would go to bank B, you might not know the bank A does something with a mattress money where bank C does not. So we just kind of help refine that process to make it a little bit more streamlined for you.
And what was that program that you just mentioned?
It's something that we coined. It's called our Lender Ready program, that says once you complete your application process with the RNHS and agree to see a counselor, then we will assess your situation. And if you need some minimum criteria, like a minimum credit score, you have some income, there looks to be some affordability, we consider you lender ready. And then we start proactively along with you, start identifying the right lenders to introduce you to assess, if it makes sense for you to move forward with them.
And what about down payment programs? Is that something that you work with? Is that something that I have to find on my own, or you tell me, oh, okay, go to XYZ and apply?
Yeah, so Diane, that is also a great question to also utilize the resources. So as a housing counseling agency, it really is our job to be able to provide you all the resources. So yes, we do. I say we are one of the leaders in understanding what down payment assistance programs are available, what would best meet your needs, knowing the lenders who will accept those programs. So that's the kind of support we offer.
Okay, thank you very much.
You're welcome. Stephanie, do you have another question?
Yes, I do. I just wanted to ask Susanna to explain the difference between a pre-qualification and a pre-approval and desktop underwriting so that people understand where they are in that process.
Excellent question. Yeah, Stephanie, because I know with realtors right now, and at the time we went into the shutdown to go out and view a home, you had to be pre-approved. What does that mean versus pre-qualified? So pre-qualified means you filled out an application and you've told me all your numbers. I've run a credit report and run it through DU, which is desktop underwriting. It's a computerized program that takes all of the information and runs it through and says, okay, you fit all of the guideline criteria outlined by Fannie and Freddie, and I got an approve. So that's desktop underwriting. The pre-qualification letter says that I've looked at your credit, you've told me your numbers, and based on that, you're good. But it doesn't show me the documents. It doesn't show me the different ins and outs and the nuances of the loan that needs to happen for a full pre-approval. The full pre-approval means I've also looked at your documentation. So I've taken what you've said and I've matched it to your documents, and I've run your credit, and I've put it all through that DU, that lovely desktop computer god that we have to bow to get this done. And it spit back approval. And that's a full pre-approval. And I know that to go out and view properties, you have to have a pre-approval. Do they still need to have a pre-approval, Stephanie?
A lot of, well, it's a preferred
Yeah.
document. When you have a pre-qualification, then, you know, agents are saying, well, you're not fully approved. And so, yeah, they would prefer that.
Okay. I was wondering, because I know with the COVID shutdown, in order to go see it, you had to have the full pre-approval.
Yeah, because they're doing open houses and all of that again, then, you know, it's people can go see the property and they're submitting pre-quals and pre-approvals. The pre-approval will prevail
Yeah.
typically
Okay.
unless the terms are astounding, and then the agent calls the lender and, you know, all of that. So pre-approval is preferred.
Yes. Okay.
Well, you guys are lucky tonight because you also have another subject matter expert in Stephanie Christmas, a well-known and established realtor. So Stephanie, I really appreciate these questions. I know they're probably stemming from some of your clients. So please continue to ask, because I think these are very valuable questions to our audience, especially dealing with the current climate. So thank you for those questions.
Yeah, I really want people to go out prepared so that they aren't, it can be stressful. So when you're fully prepared, you know what to expect, and, you know, you're going to have a better outcome.
Yeah.
Absolutely.
Back in the day when we were issuing pre-qualifications left and right, you know, get into contract and I'd get a pay stub, and lo and behold, the income wasn't what they said it was, or they wound up being self-employed, and that self-employed income was being calculated on their part by their gross receipts and not on their net income. And it would just be a nightmare. So to be pre-approved is really a huge asset on your part. And if you have a lender who's willing to get a credit approval, which means it goes to the underwriter as well, you have that added layer of protection for you when you're going into contract, that it really does and will close.
Thank you for that. Again, if you have a question, go ahead and raise your hand and we can open up your mic.
Hi, this is Bess again. I just had a question about the loan process itself, and I know the times are different, how long it takes to get a loan approved. But what is kind of an estimate of a loan approval if you don't have, like, you know, outstanding questions on your credit and things like that? What's the typical time frame for a loan approval?
Good question. So for myself, a lot of us are working with a lot of cities as well, such as nonprofits, and also doing down payment assistance programs where there are lotteries. I usually try and make sure that once you apply for me, that I've reviewed your information in 72 business hours. So if you apply on a Monday, by Thursday, you have an answer, or at least some questions from me in order to wrap it up and get you a pre-approval letter so that you can be involved in whatever lottery or BMR or just go out and shop if that's what you want to do for that weekend. But then the typical process of a loan, once you've been pre-approved, a lot of my process is to get that over to my processor so that they can do some of the background paperwork, get you to the underwriter and get credit approved while you're out shopping. And then when we add the property, we can close you in that 21 to 30 days, depending on if you have down payment assistance or not. So it really, a very easy and clean loan would be, I've done several at 21 days, but it means the prep work, again, getting you to my processor and to the underwriter is really critical while you're out shopping.
I think what you're hearing is preparation. So I would really use this as a guide. So as you get ready to go to the lender, you'll already be prepped and prepared the type of questions and already start knowing what you may need to explain or documentation you may need to provide would be very helpful. And also, Suzanne, in regards to debt, can you also share, like you mentioned, divorce decree? Can you speak to if there, or child support? Understanding the terms, if you have a child 17 and a half and you are either receiving child support and or having to pay based on child's age, how does that factor into child support?
So for income, we like to see that it will continue for 3 more years. So if you're receiving income from child support and that child is 14, you will have 3 more years. If you're receiving income and that child is 17, you only have 1 more year, and the lender will see that as not continuing and not be able to use that. I have had some borrowers where that income is pretty substantial and unfortunately not able to use it because the child is just about to be 18. Now, in terms of that as a debt, if you are paying child support, we are going to factor that into your debt to income ratio. However, if the divorce decree shows that that's going to stop in less than a year, it may be an underwriter discretion that they may not count it. But again, because it is something that is that real gray area, that's where you want to have your loan underwritten and the question asked. I have a great group of underwriters myself, and I know a lot of the banks and lenders that Richmond Neighborhood Housing works with all have direct lines to underwriters. I can send a copy of the information off to them and say, hey, would you count this? Or would you not count this and put it in the debt to income ratio or not? And that really is very important, that piece of communication, understanding how much longer that debt would be for you to be obligated to pay.
And that's, I don't know if, did I cut you off or did you have another question?
Oh, no, that answered my question. Thank you.
And I don't want this to turn into a pre-purchase class, but Susannah, you're bringing up some good points. If you attend our class, you know that lenders approve you on what? Your gross income, but you live on your net. So if you are getting qualified on short-term income, that 3 years or more, you know your mortgage is going to be 30 years. So you also want to plan and prepare that when that extra income stops or when that new debt becomes valid, like student loan debt, are you still going to be able to afford? Goes to that pre-approval, pre-qualification letter. That tells you the maximum that you can qualify for, but that may not be the amount of house you want to buy. So with Stephanie being here, and let me know if you would attest to this, Stephanie, you will have a good real estate professional that will sit down with you and say, okay, I know you say, it says you can qualify for $700,000, but how's that going to fit in your budget and how much house do you really want to buy? And have that conversation so that you're not over extending yourself, especially if you know income could adjust or debt can adjust during the term of your 30-year loan. Stephanie, do you agree or disagree with that idea about making sure, just because it says it on paper doesn't mean you can afford
I
it?
absolutely agree. And I typically, because I work with Susannah a lot, I typically have them call Susannah and say, this is where I feel comfortable, so that she can tell them really what the amount is that they can purchase. Because what you're approved for versus what you're comfortable with, and what works for your lifestyle can be two different things.
Appreciate that. Because we're advocates about
Absolutely.
getting you into homes, but we sure want you to keep your home.
Mhm.
Yeah,
It's one thing to
remember-
get it, but it's a whole nother thing to keep it.
Yeah, remember that the whole reason we're asking a lot of these questions is we need to know you have the ability to repay that loan. And what we may show on paper may be one thing, but what you might feel comfortable with is completely different. So it really is very important. And I can't speak highly enough of Richmond Neighborhood Housing, Stephanie. They all help really every buyer that I've worked with understand what the reality of that mortgage payment is versus what's just on paper and why. And knowing a lot of this information and getting yourself involved in a pre-purchase workshop and getting yourself talking and interviewing people is really very, very critical. It's important. You've got to feel good about the people behind you. You are building your team to get into a home, and it starts with you and making sure that you have the information.
Can I just say one thing also, just because
Sure.
I'm really on this call because both of these Susannah and Richmond Neighborhood Housing Services are excellent in getting you prepared for the purchase, and they know everything about down payment assistance and closing cost grants, exceptional amount of information. But I also want to say that when you're prepping yourself, start prepping now. Even if your purchase is going to be a year from now, start getting your documents in order. Make sure that, like Susannah said, you don't have areas where you have overdrafts on your on your statements that you're going to be using, and make sure that they're just clean, that you have savings, you have money in there that because they're going to look at those documents, and I'm not saying scrutinize, but it has to make sense to them that you can purchase. And yeah, so just keep your documents clean.
Yeah.
And if you're going to put a large amount of money in there, put it in 3 months before, or
Very much so.
I mean,
Yeah.
I'm just saying,
Let it sit.
because when you start moving large amounts of money around on your bank statements, show it's going to cause questions, and you're going to have to provide a lot more documentation. And the last thing is, if they ask for something, you can debate it all you want, but that's just going to slow down your time. If they're asking you for it, that means they need it, and it may not make sense to you. But if you want to just get through the process, I would suggest just getting them what they need, and the realtor will help you get through the process. But I see a lot of people saying, I don't want to do that, and they shouldn't, and they're crying and they're going through a lot. And I just say, prepare yourself mentally and remember where you're trying to go. You're trying to purchase a home, and the lender needs to see that you meet the criteria that they feel comfortable with. And so I wish you all the best in it. It's one of the best things you can do for yourself. And that's it.
Thank you for that. Having this industry knowledge is very helpful. Diane, and also it speaks to, the level of engagement of your real estate agent. You have some that are strictly transactional. They know the transaction front and back. And then you have some folks like Stephanie who also get involved in the lending aspect. So definitely understand what support you need and find the right folks to support you, because to Susannah's point, it is a team. So Diane, go ahead and ask your question, and then Araceli, you're next.
Okay, so base what was just said to make sure I understand. So if you have money in a 401k that you want to use to help with your down payment, you should you take that out 3 months prior?
No, sorry.
Stephanie, I totally defer to you.
Right?
Go ahead, Susannah. I wanted to catch that one quickly.
No, let me finish. So I was gonna say, so if you have money like in a 401k or in a retirement that you haven't touched yet, and some of those monies, in both those accounts is what you're gonna use for the down purchase of your home, when should you start taking that out?
It depends, first off, how you're going to take it out. The first method is the hardship withdrawal, which is one of the ways and an acceptable way to take a direct withdrawal from your 401k. You need to talk to an accountant on the tax ramifications. However, that one usually takes a little bit of time to get the money out if it's allowed from your 401k. So the first thing you need to do is make sure you have that ability to take money from it. Then find out the two ways you can do it, the hardship withdrawal or a loan. And both of those, you'll want to start those transactions after you're in contract. So leave the money alone until it's ready to be pulled out. And your lender should guide you on the types of documentation showing it coming out of your 401k and into your account. Okay?
Okay.
And Araceli, before open up your mic, I just want to interject. This is where your counseling agency will be supportive, because we will want to think through their withdrawal of retirement, because most of us, that's the only other source of supplemental income we have. And depending on how much you plan to withdraw, if you take it out as a loan, the average individual is probably not going to stay on their job as long as it takes to pay back that loan. And it will be a tax consequence if you are under the retirement age. And that is money that you no longer have access to at retirement. So we want to think that through. Is that the last resort, especially if there's down payment and other, it's always best to use other people's money if you can, but understand the consequences. So just wanted to put that out as it relates to the 401k withdrawal. Araceli, your question?
Hi, I had a quick question in regards to some of the information you guys were just saying about having that family support group and not moving money. I've heard stories, in my case, I have that family support group, and, sometimes when you're last minute trying to purchase something, if they're letting you, with some kind of assistance with funding, is this something, because I know you're saying not to transfer money at the moment, just wait until you're at the end? Or is this something that they can provide now and then just wait a couple months? Or that's where I'm like, okay, I know for sure I have that support group, but it's like, I don't want to move around accounts and make it look kind of messy at the moment.
Right. So with gift funds, if you have family members who want to give it to you now, put it in your account. We may need to verify that they had the ability to give those funds. In other words, we need to see their bank statement, again, no redactions, and a gift letter, and the transfer of those monies to your account. Or you can wait until you're in contract, and each person who is willing to gift you money, you need a gift letter, you need to source where the money came from. So again, their bank account, and talk to your lender. I've talked to family members frequently and communicated directly to them how their gift is affecting things, number one, and what documentation there is, and that I am held very, very strong to the Privacy Act. I cannot, post this on a billboard somewhere that there's somebody's bank account. It's really important that we document that flow of money, but your lender should guide you at the time. If they're willing and they say, you know what, I've got the money now, I'm just giving it to you, accept it. But do know that if you go into contract tomorrow, you may have to provide me some documentation from my lender.
Thank you.
Mm-hmm.
This is a great conversation. Diane, go ahead and ask your question. And you're on mute if you're speaking, Diane.
Sorry. So I think escrow, it takes like what, 4 weeks for it to close, something like that? What if you're dependent on taking money from your 401k and they say it takes 6 weeks to get your money? Then what do you do?
I've yet to have a 401k take that long, ever.
Okay.
The longest I think I've ever seen in my whole career, which has been many years, has been 3 weeks.
Oh, okay.
But definitely, if you are thinking that that's the direction to go and you've talked over all the alternative sources, I know that, Richmond Neighborhood Housing will talk also as well as to other resources available. There are grants and down payment assistance before tapping into that 401k.
Okay,
But if that is the direction that you go and you're going to be doing this, typically reach out to your benefits coordinator, or if you have the ability to email your 401k and say, do I have that access to take a withdrawal or a loan? What are the consequences if I move jobs in 2 years and I have got a 5-year note that I still have to pay back? So
Mhm.
just, understand how it all affects you. It's very important. And Richmond can help you with that.
okay,
And
okay.
no, too, it's not dollar for dollars. If you see you have $50,000 in your retirement, doesn't mean all of that's going to be made available. So it's good to start having these conversations early, so you know
Yeah.
what you really
Correct.
have access to and what your
Because
process is.
you have to pay taxes on that money.
Yeah. Well, the 401k will only allow you to take a percentage of it anyway, whether it be on a loan or on a
Mhm.
full withdrawal.
Yeah.
Mhm.
Yeah, and Diane, we're no tax experts, so I'm not providing tax advice, but the
Right.
amount is based on the percentage that you're allowed to withdraw. Taxes don't become material until the payments become due, or depending on how you withdraw. What other questions do you have? Okay. So I appreciate, Lakita, go ahead, ask your question.
The young lady mentioned something about if you have extra jobs, like you drive for Uber and you have that income, that it won't
Mhm.
be. But I missed what else she said about that income won't be counted, or the money or something.
Okay, so what I was speaking about, and thank you for bringing that up. So I know a lot of folks when they're out looking for a home and you get pre-approved and it may not be quite where you want it to be. And I know this market is nuts. California just has a crazy market. Um, you can't just go out and get a second job and expect that income to count. We like to see a 2-year history. So if you do have a 2-year history and we have 2 years taxes to show that you've got income from that second job, we will use it. But there cannot be any gaps. And it really, really needs to be a 2 solid year history of that second job. They figure if you were crazy enough to do 2 jobs in 2 years and you're still sticking it out, you're going to do it for a few more years as well. So,
And we're
I
gonna
hope that.
reframe it. It's not that we're crazy. It just means we're
Yeah.
just trying to do what we can do to make this happen.
Yeah, if
Um,
it takes that, yeah, it's a lot. I see some people working 80 hours on 2 jobs, and I'm like, where do you get the energy?
yeah. So Susannah, can you also speak to the gap? So that means you would have from January to December, year one, December through December, year two. So you couldn't like drive Uber for the summer, not do it in the fall, then pick it back up in the winter.
Exactly.
Okay.
Yeah,
The-
exactly. We don't want to see any gaps. So if you're tending bar in the evening at one bar and you quit and 3 months later you started another bar, we've got a 3-month gap, meaning there's that piece. And then you go to your day job during the day. So those sorts of that second gap, it really, we can't have it. It's got to be, you move from one bar to the very next bar. And then if you've done it to 3 or 4 more bars where you've been pouring drinks and being a bartender, then we've got to see that consistency.
Okay,
Lakita,
so that the second job, it could count as where you got your money from, but it can't count towards income to say
Correct.
that you make $100,000. So
Right.
okay, got it.
But Lakita, I believe we're saying if you can show that second job, you've earned income for 2 consecutive years without any
Right.
type of breaks in that employment, yes, it would go toward your qualification and income.
Right, I got that, but I was
Okay.
saying, what if I wanted to go get a job right now to make some
No.
extra money to put on this down payment or something? That's not going to count
Exactly.
as my
Exactly.
income. It's going to just count as, you could see where the money
As
came from.
assets.
Yeah.
It'll count as assets, cash to
Okay.
close, where you show me the money.
Okay.
Yes.
Got it. Okay, so
Excellent.
you're spot on. And since we are talking about gig income, other incomes, Susannah, again, not being tax professionals, but would you agree with this statement that if you are an entrepreneur, gig economy, where you have the ability to leverage deductions, when you're not trying to buy anything, you leverage all deductions, but when you're trying to buy something, you need to be able to show income. So if you're
Gotcha.
going down this path, as a 1099 and anything like this would be the time to be talking to a tax advisor to understand how much income do you need to show to be able to qualify for a home.
Yeah,
Agree?
absolutely perfect. And also know that on self-employed, we are going to take 2 years average. So if 2020 was 2021 was really good, guess what? We're going to average the two. However, if 2020 was really great and 2021, we're going to take the lower. We're always going to be more conservative. Okay, so take a look at your own tax return. Divide your net by 12, see what you come up with. And, always know, I mean, just pretend your lender's Uncle Scrooge in a way. They don't want to give up that penny without knowing that you have the ability to repay.
Diane, your question.
Yes. I dropped my pad 1 second. Make sure okay, I'm unmuted. Okay, thank you for your patience. Okay, so a question that I have is, in terms of who to talk to, what's the difference between a tax advisor and an accountant?
So from our perspective, from my perspective, a tax advisor can be an accountant. Anyone can be an advisor based on how they run their practice. What you're typically looking at is a bookkeeper, accountant, CPA, and one that is an enrolled agent. So probably would look more for an accountant, one that is doing this from the practice of accounting versus a bookkeeper who is just doing, putting numbers in on a document. So probably looking at an accountant who probably will have more advisory skill. Typically, because of most of our assets, you're not going to a CPA because that typically is for business and very sophisticated finance. An enrolled agent is one that can act on your behalf if you are ever audited and work directly with the IRS. So accountant, enrolled agent preferred. So that probably would be your sweet spot as far as trying to find this talent to support you.
Okay.
And talking about teams, know that you should be empowered to have conversation and dialogue with people before you sign them on. So talk to me, tax professional. How have you worked with your other clients? How do you engage? How comfortable do you feel in being over, across the table? Do you feel intimidated? Do you feel as though they're invested in trying to get you to accomplish your goals? So interview, talk to some folks, because this is a journey. They're going to be attached to you for some time, even after you buy the house. So you want to make sure this person is going to be willing and able to work with you in the way in which you need them to. And that's for all your folks, your real estate agent, your loan officer, your counseling agency, everyone that's going to be helping you, making sure that they're going to mirror the things that you need to make you feel comfortable through this transaction.
An accountant versus like a tax attorney?
You don't need a tax attorney because that's typically someone who is going to deal with tax litigation. So they're a lawyer for taxes. They're not necessarily the one rolling up their sleeves doing your tax return.
Yeah, they're not crunching the numbers for you.
Okay. And they'll charge you a big money just to talk to them for a little while too.
Yeah.
Exactly.
Okay, what other questions are there? So this is how we do our sessions. If you have gotten your questions answered, you can start dropping off. That lets us know that we've answered. I see Lakita with a question. Go ahead, ask your question.
Okay, so the Richmond Neighborhood Housing Council, I hope I said that right, gives us a certificate after the 4-week program. What is this certificate good for?
It lets your lender, like Guild and any others, know that you completed the course, because many of the community lending programs you learn about in the class, the 3% down, the 3.5% down, the down payment assistance requires that you get a education certificate. So that's what that allows you to actually engage, to have access to those programs.
So will
Okay.
we have, I'm sorry. I was going to say, so will we have to attend first-time homebuyer programs?
Depending on the lending product that you choose, would possibly require that you take the class. So depending on where you are in the process, Diane, if you've already gotten approved, you're working with your pre-approval and the lender has not requested, or you may ask them, because sometimes it becomes, oh, I forgot, you got to take a class. You want to ask to make sure that the product that you have been approved for does not require it. But we highly encourage it, whether you are, doing it to get access to a program, but it's just good information, because what you're learning here, you get that over the course of 4 weeks.
And I will say as a lender that the folks that have gone through a homebuyer education class ask more poignant questions when it comes to dealing with the loan side, whereas I'm not being the housing counselor first and going through that piece and explaining debt to income ratio, explaining FICO scores, explaining all the different ways that loans can be done and the verbiage. You get that verbiage, you get the gist of a lot of what you're going to hear when you're talking to a lender if you've been through a homebuyer education class. It is, to me, number one when talking to a borrower, and I can clearly tell they're not getting some things because they haven't done that background. I always recommend a homebuyer education class. And Richmond and CHTC, NID, Operation Hope, eHome America, they're all on my list that I send out. And it's really critical to allowing you to understand the verbiage involved. And this particular thing for today is to really understand why we start to ask and get deep into the questions of your financial profile and that much farther in. So I honestly, as a lender, if you have not taken it, whether you need it or not, and you're thinking about a home buying process in your future, take the class so that you get the verbiage, you get the fair lending piece with it, you get the realtor piece, you get the lender piece, and you get the home counseling piece. It's really, really critical, really, as far as I'm concerned as a lender.
Can you put those names, those programs that you just mentioned in the chat?
Sure.
Or just repeat them again?
So I'll put it in the chat, but for those that are interested, the ones that were mentioned are HUD counseling agencies. So they're just like us, Richmond Neighborhood Housing Services, located here in Richmond. We support all of the Bay Area counties. You have CHDC, also known as Community Housing Development Corporation of North Richmond, who also sits in the city of Richmond, or the unincorporated part of North Richmond. You have Operation Hope, who sits in the city of Oakland. And then you have NID that has a number of offices, but also supports the Bay Area. So we all provide that certificate through education. There's also eHome America, which is an online platform that we offer. So if you don't have time to take the class or want to do it virtually, you can do it at your own pace. Now that does come with the cost. And some agencies will charge for their services, some do not. We do not charge for our counseling. We do not charge for the class. So, but there are a number of agencies that do the work that we do. And to participate in the programs, the question Amber has is, do you have to purchase in Richmond? No. The housing counseling agencies can support any purchase throughout the state of California. Of course, your agency is going to be more equipped to address the area in which they serve and be more familiar, but it is not limited to the demographic of the area. Okay. Yes, you will have access to the recording. It will be on our YouTube channel, with today being Wednesday. May be there as early as tomorrow afternoon, but definitely by Monday. If you visit richmondnhs.org, click the YouTube icon, you'll find this video. Okay, what other questions do you have?
How often do you, like this meeting you're having tonight, how often do you have these meetings? Or will there be another one after this? And what would be the next step if you're interested?
So if you're interested in taking the pre-purchase course, we have courses every month. Because of COVID, we've moved to a virtual platform. It's an 8-hour course, so we've broken it down to 2 hours a week, which is every Thursday. So if you have interest in attending for April, then I would reach out to Tisha, and I'll put her email in the chat to let her know that you'd like to sign up for the April class. As far as our Money Matters series, they happen periodically based on content. So I think we have another one coming up in May, talking about how to work with the realtor. So these are periodic, but the pre-purchase workshops happen every month.
Okay, thank you.
Okay, so if you have gotten your questions answered, go ahead and you can start to drop off this call. This allows us to know that we've answered your questions. Or if you'd like to have some one-on-one time, I'll be ending the recording very shortly, and you can stay on to the last person leaves, and then Susannah and I'd be happy to answer your question. But again, you can find this video on our YouTube channel. If you'd like to get more information about our services, or anything to clarify what you learned tonight, I put Tisha Hernandez, our administrative assistant's email there, and I saw some familiar names. So those that are in class that I said you get homework points for being here, you will enter the drawing for class on Thursday. So thank you guys for joining. I'm going to now stop the recording.